Bitcoin crashes to levels not seen since last week, as the dust settles following a hawkish Fed meeting where Scrooge himself, Jerome Powell, ruins Christmas and scares the crap out of markets by saying inflation might return. Shocking, right? So what does this mean? Have we topped out at 108K? Should we pack it up and say see you in 4 years? Does higher fiat inflation mean you should sell your Bitcoin? We discuss. Plus, we look at some data that gives us a window into who might be selling Bitcoin here, and the answer might surprise you. Things were going so well. Bitcoin looked confident over 100K, we were all on our way to finally getting girlfriends, and then Jerome Powell decided to step up to the podium.
It was our time to party big.
Good afternoon.
About 8 times a year, Federal Reserve officials gather and discuss and make decisions about U.S. monetary policy. What Fed Chair Jerome Powell announces during this meeting about interest rates and inflation prints has strong effects on markets globally. Sometimes, when his remarks are considered dovish and he accelerates interest rate cuts, the markets respond favorably and go up. Other times, like yesterday, his comments are considered hawkish and the market responds in a sell-off.
Good afternoon.
So what exactly did Jerome Powell say that caused such a market sell-off? Well, he basically said that inflation is still not at their 2% target, alluding to Trump's announced tariffs possibly increasing inflation in the future, and so announced a slower rate cut projection for 2025. Now, interestingly, he was also asked a question about Bitcoin, which caught a lot of people's attention.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
I've seen some takes online that this response from Powell is proof that a U.S. strategic Bitcoin reserve won't happen, since Powell himself claims the Fed is not legally allowed to buy Bitcoin. This is not true, as the Fed is its own entity separate from the U.S. government. If the U.S. was to build a stockpile or reserve of Bitcoin, it would happen at the U.S. Treasury level, not the Federal Reserve. But I digress. Every time these meetings happen, it never ceases to amaze me how ridiculous our monetary system is. We have a bunch of unelected officials coming together to turn the knobs and dials on the global economy and announce to the world what the price of money will be for the next few months. This is, of course, in stark contrast to how Bitcoin works. Bitcoin's monetary policy is set in stone in the form of computer code. The supply issuance, inflation rate, and total supply are completely fixed and known, meaning we know exactly what the inflation rate and supply issuance of Bitcoin will be next year, in 10 years, and in 100 years. Doesn't that sound a lot more stable? It's kind of ironic that Bitcoin is considered the volatile currency. In reality, Bitcoin is the only stable currency we have. Sure, its price in US dollars is very volatile, but I think that says a lot more about the US dollar and human psychology than it does about Bitcoin. Now, before we get into where this leaves us in the cycle and what the data says about who might be selling Bitcoin here, let's hear from the doctor himself, Saifedean Ammous. The author of the Bitcoin Standard and the Fiat Standard was on CNBC last week for the first time talking to Joe Kernan.
Bitcoin is continuously proving its value to more and more people. More people are beginning to realize it. And as more people realize just how revolutionary and important this is as a monetary technology, more people buy it and the price keeps going up. It's been going on for quite a while, and I think it's going to continue because ultimately Bitcoin is a money that cannot be inflated. Nobody can make more of it. There's only going to be 21 million. That's it. And it's just such a simple fact, but it is so unique because no other form of money can credibly claim such a property. And that means that eventually everything continues to decline next to Bitcoin because you keep making more and more of everything.
Fiat money and the monetization of debt, which every time the government does something, it's basically almost like mining gold, except in this case, we just increase the supply of the existing money to pay for what we're doing. And that's never going to work. And even when you're off the gold standard, gold has a stock to flow. We can only make so much per year, or produce so much per year. Same with Bitcoin until we hit 21 million, and then there's no more produced. And at that point, that will be the stake in the ground to value all other currency, right?
Yeah, and I think that's really ultimately what it comes down to. The thing that made gold money, why gold became money, was that it's
it wasn't
supply.
Jewelry, Safe. It wasn't. Everybody thinks, and that's the misunderstanding of what money is. It's not because you can make a nice ring out of it. There's characteristics of why gold for 4,000 years has been used to represent value, but it has nothing to do with what it's used for.
No, it stores value well because it's very difficult to increase the supply of gold. It's very difficult to increase the supply of gold substantially. Every year, the supply of gold goes up at only around 1.5% to 2%. And so that means that people who hold it as money end up doing very well for themselves, and people who hold other things don't do well. And that is true for gold, and that's what made gold money for the whole world practically at the beginning of the 20th century. Then governments come about, and they use their debt as money, and since then, the average over the last 60 years or so, between 1960 and 2020, for 60 years, the average fiat currency grew in supply at around 14% per year. Or overall, fiat currencies grew in supply at around 14% per year. So we went from 1.5% to 14%, about 10-fold increase in the supply growth rate. And 14% per year means that on average, you lose half of the value that's stored in money over 5 years. So you lose half of the value of your money over 5 years. That's the average fiat experience. Of course, some currencies are better than the average, like the US dollar and euro. They only increase at around 7-8% per year. Some currencies are a lot worse. They increase at 20, 50, maybe 100 sometimes % per year. But on average, it's just continuously increasing in supply, so its value declines. And because its value declines, that incentivizes everybody to A, not save, and B, take on a lot of debt. And that's why everybody is in debt. And that's what Bitcoin fixes. If we go back to having a hard money, where money is no longer debt, we no longer need to be monetizing debt. We no longer need to get everybody to become a debt slave in order for us to have a form of money. We have a form of money that is just a commodity that doesn't require anybody to get into debt for it.
What Saifedean says at the end there is key. The Fed's main control knob for the economy is interest rates, which in effect controls the price to borrow money or the cost of debt. In a monetary system backed by hard money like gold or Bitcoin, you don't need debt in order to make the economy run. So in effect, interest rates become a lot less important. If you want to learn more about how our monetary system works, I highly recommend Saifedean Ammous' book, The Fiat Standard. And if you want to know how our system could work, read The Bitcoin Standard. You see, Bitcoin isn't just another investment we can use to outpace inflation or increase our wealth. It's an entirely new monetary system not based on debt and money creation at the whim of a few bureaucrats. So I find it kind of ironic that the Bitcoin USD exchange rate dumps at the whim of what one guy in a suit has to say about interest rates. Bitcoin replaces the need for a corrupt institution like the Fed to even exist in the first place. But alas, we are just still too early for most people to get it. So I will say, if you're selling your Bitcoin in reaction to what the Fed said yesterday, you have no idea what it is you own. And speaking of selling Bitcoin, who exactly is selling here? Obviously, every new bull market brings in a lot of speculators that don't understand what they own. So you can expect a lot of trading in and out as we climb the ladder towards the top end of the hype cycle. We definitely saw a bunch of entities that have only held for 3 to 6 months sell off here, happy with their small gains. That's what we call short-term trading or gambling. But since we've hit the 100K milestone, we've also seen a large amount of long-term Bitcoin holders taking some profits. In fact, as this chart shows, so far this month we've seen the largest revived supply volume since the 2018 bottom. In other words, this is the biggest volume of old coins taking profit in a bull market ever. This might be shocking to some, as you've always heard from hardcore Bitcoiners that you never sell your Bitcoin. But when you really think about it, it's actually not all that surprising. 100K Bitcoin is a massive psychological barrier. Many of these sellers haven't moved their coins in 7 to 12 years. The price of Bitcoin 7 years ago today was $17,000. The price of Bitcoin 10 years ago today was $300. When you hold Bitcoin for more than 5 years, your financial life has changed. In many cases, your wealth becomes over 99% in Bitcoin. So the natural thing to do is to spend some of your money to fund your lifestyle. Maybe you pay off your mortgage, or buy that new car you've needed, or you pay for that nice vacation you've held off for years to continue stacking diligently. As I've said in many videos before, money is a means to an end. It doesn't make sense to hoard your Bitcoin forever. You can't take it with you in the afterlife. That's why this whole idea of never selling your Bitcoin doesn't make any sense. Bitcoin is better money meant to be saved, but money is still designed to be traded for other goods and services. This is just a great example of how long you should look at saving your Bitcoin. Minimum 4 to 5 years, but 10 to 25 years or more is even better. Bitcoin is designed to go up forever, and that's why eventually it will replace the Fed and every other central bank in the world. So now that we know who is selling, let's look at who's buying. Well, the ETFs are still gobbling up Bitcoin like there's no tomorrow. The ETFs have seen 15 straight days of inflows, and since Thanksgiving, they've bought $6.7 billion worth of Bitcoin. So if you're selling here, you are selling to the likes of Michael Saylor, MicroStrategy, nation states, and ETF issuers like BlackRock and Fidelity. Unless you're an OG Bitcoiner who's taking a little bit off the top to fund your lifestyle, don't sell your Bitcoin here. Instead, buy the dip, because we're just getting warmed up in this cycle. One metric that tells me we have just started this bull run is Bitcoin priced in gold. In gold terms, Bitcoin has just barely broken above its all-time high. You can see the lower horizontal white line showing the previous Bitcoin gold all-time high in the previous cycle. This tells me this thing is going much higher. Then there's this pi cycle top indicator chart. In many ways, it's been the most accurate top indicator in previous cycles. The basic premise is when the short-term price action moves way faster than the medium-term price action, the top is in. So it quite accurately detects the end of the hype phase and the blow-off tops. As you can see here in the chart, the short-term price average, which is the orange line, hasn't even come close to catching up to the medium-term price average, which is the green line. This suggests we again are not even close to a cycle top yet. So don't panic sell on the words of Scrooge himself, Jerome Powell. Stay calm and buy the dip with Swan. Visit swan.com or download the app by searching for Swan Bitcoin in the App Store. Sign up in minutes and buy your first $10,000 with zero fees. Plus, don't forget to sign up for priority access to our newly announced premium Bitcoin rewards credit card. Sign up at swan.com/card. I'll leave you with the wise words of James Lavish. Yes, Bitcoin is volatile. A month in Bitcoin feels like an eternity. A week is like a generation. 3 days is a lifetime, and a day is like a year. Step back, zoom out, and the volatility becomes a positive. Don't let the volatility scare you away. Embrace it. As Michael Saylor says, volatility is vitality. In a world where everything is getting more and more expensive, we need bold vitality in order to get out ahead. Bitcoin is bold, vital money. That's it for today. Let me know what you think of this massive crash to 100K in the comments below. Like this video, share it with your worried friends and family, and subscribe to the channel for more high signal Bitcoin content. Thanks for watching, and remember, tick tock, next block.